When you first start out in trading, just looking at a chart may look a bit confusing to you. However, when you start understanding what consolidation is, and then you start understanding what manipulation is, you will then be able to start understanding how you can put together a very simple set of rules which will help you pick out the most precise entries. And better yet, when you start understanding that this consolidation phase, this manipulation phase, and this distribution phase all happens within certain times, you will be able to limit the amount of time you spend on the charts because you will know when you need to look for your opportunity. When you get to that stage, at that point, you will be able to finally become consistent in trading. And at that moment, you will be thankful for the amount of effort that you put in during your journey of learning. So just focus on the very basics: consolidation, manipulation, and distribution. Learn these three things, and then you will be able to start finally putting the pieces of the puzzle together. Doing just this one thing will save you so much time as a professional trader. When you come onto the charts, if you analyze the DXY, you are able to find a bias for at least 3 different pairs. Let me show you what I mean. The DXY and the Forex pairs such as Euro USD, Aussie USD, and Pound USD work in correlation with each other. So if you've got a bearish DXY, you would have a bullish bias on Euro USD, Aussie USD, and Pound USD. So when I look at price action here, it can definitely go both ways, but this is the DXY now respecting this bearish fair value gap. So on a smaller time frame, I would be looking for price to move lower at the moment, which basically means now I'm looking at a potentially bearish DXY. When I go and analyze Euro USD, I am automatically going there with the mindset of I am looking for bullish moves. So when I get up the Euro USD chart, you can see they work in correlation with each other because we're respecting this bullish fair value gap. So now on a smaller time frame, I'm able to analyze and look for points of interest or bullish moves. And if I don't see a trade opportunity I like, I can move over to Aussie USD or Pound USD and look for those bullish moves simply because I have done just one thing, and that is analyze the DXY. To start utilizing the DXY to make your life as a trader 10 times easier. Stop listening to people who are trying to overcomplicate your journey of learning how to trade. You don't need to understand the big fancy words and all of the different technicals that you get with trading. All you have to understand is that the market seeks 2 things: areas of inefficient price action and liquidity. It will seek to rebalance inside inefficient price action, which is this buy side imbalance here. It will target liquidity. If you look at Euro USD, you can see we swept liquidity. You can see we are bearish to the downside. You can see we've got a lovely order block, and we've got this area of inefficient price action, which price reacted from to the downside. If you go to a smaller time frame, you can see the reaction from the weekly time frame has created a sell side imbalance right here. That is an area of inefficient price action. Where is it targeting? Liquidity. You can then see it created another sell side imbalance right here, which is an area of inefficient price action. Where is it looking to target? Liquidity. So my target on a lower time frame would be sell side liquidity, and I'm using the higher time frames, keeping things as simple as possible, and I'm not listening to any of the noise. I'm just trying to keep things as basic as I possibly can. And I can clearly see here this is very, very bearish, meaning that on a smaller time frame I'll be in a better position to look for sales in the premium sides of my range, targeting sell side liquidity. And all I'm trying to do is keep things as simple as I possibly can. The best entry method out there, in my opinion, is utilizing something called a balanced price range, and I'm going to show you exactly what that looks like. So as you can see, price is looking pretty bullish at the moment on this time frame, but let's say we're expecting bearish price action. What you can notice here is this area of imbalance, and if you let price play out, what you will now see is that that previous buy side imbalance has been violated and not respected by these down candles here. That is telling you there are sellers in the market that are very, very strong, and they are intending to move price lower, therefore turning this imbalance into an inverse imbalance. If a sell side imbalance has been created within this inverse imbalance, that is a balanced price range, and basically this is a really strong magnet for price to rebalance inside of and then drop to the downside. So when you see these areas, you can honestly enter anywhere inside of here. So my entry would be at 50% of this imbalance inside this balanced price range, targeting liquidity below. And as you can see, price has come right up to the entry, tested the inverse and the imbalance, and reacted to the downside. You can honestly look for these everywhere on the market, and you will see more of them play out than not. But go and back test this and let me know how you get on in the comments on this really strong entry method.